All right, so you're trying to boost that credit score, huh? That's great. We've got two awesome sources here from Bank of America and Experian to really dig deep on this.
Yeah, we've got, Bank of America's got like a really practical guide, and then Experience is more about, explaining like the why behind it all. So it's a cool combo.
So by the end of this deep dive, you'll know not just the steps to take, but actually how those credit score algorithms work.
Yeah, we're going to crack the code of those credit scores.
Okay, so let's start with something both sources shout from the rooftops. On-time payments, they're critical.
Oh, yeah, absolutely. On-time payments are, I think it's like 35% of your FICO score, and late payments can ding you for up to 7 years.
7 years? Wow, that's makes you think twice.
Yeah, every late payment's like a little red flag on your report. Lenders see that as a sign of risk.
Makes sense. So Bank of America says set up auto pay and reminders so you never miss a due date.
Oh, yeah, super simple, but it works. And actually, Experian's doing something interesting. They're expanding what counts as payment history with their Experian Boost.
Experian Boost. I've heard of it, but tell me more.
So with Experian Boost, you can get credit for paying rent on time utilities, even your streaming services. Helps build a positive history, even outside like traditional credit.
That's awesome, especially for people new to credit or rebuilding their score. Okay, so we've got on-time payments down. What's next on this credit score journey?
Let's talk about credit utilization. So it's not just how much debt you have, it's about the percentage you're using of your available credit.
Yeah, the 30% rule.
Right.
But I never quite got why that number's so important.
Well, lenders use that credit utilization ratio to figure out your risk. If you're always maxing out cards, it can look like you're struggling.
It's not just how much debt, but how responsibly I'm using the credit I have.
Right. High utilization makes lenders nervous. They think maybe you're overextended. Could default.
Makes sense. Bank of America says pay your bills in full whenever possible.
Yeah, that's the ideal. But let's be real. Sometimes you can't pay everything at once. So making multiple smaller payments during the month can help lower your utilization too.
Oh, interesting. So even if I can't pay the full amount right away, chipping away at it shows I'm managing it.
You got it. It shows you're on top of things, not letting things get out of control.
This is making a lot more sense now. I'm seeing how my actions affect how lenders see me.
Exactly. We're starting to decode the credit score matrix here.
Awesome. Okay, so payment history, credit utilization. What else should we know about?
Oh, this is a good one. The age of your credit accounts. Those old credit cards you've got tucked away, they can actually be valuable.
Really? I always thought closing old accounts was better to keep things simple.
Not always. Both sources say a long credit history is important, and older accounts are key for that.
Why is that?
Well, lenders see a long history as like a sign of stability and experience. Shows you've been responsible for a while.
So it's not just about the short term, it's the long game.
Exactly. And here's the kicker. Bank of America says closing an old account can actually hurt your score.
Wait, really? How?
When you close an account, your total available credit goes down. So even if you're spending the same lousing, your credit utilization ratio can go up.
It's like those credit score algorithms want us to think long term.
You got it. It's about building a solid foundation over time.
This is eye-opening. I had no idea there was so much strategy involved.
Oh yeah, there's a method to the madness.
Yeah, all right.
And speaking of strategy, let's talk credit mix. Having different types of credit can actually help your score.
Different types? What do you mean?
Well, think about it. You might have credit cards,
Right.
maybe an auto loan, student loans, even a mortgage. Having a mix shows lenders you can handle different financial responsibilities.
So it's like diversifying your credit portfolio.
Exactly. Shows you're not just good at managing one type of debt. You've got experience with different scenarios.
That makes sense. Is there a downside to having too much variety, though?
Experience says don't open unnecessary accounts just to boost your mix.
Yeah.
Only borrow what you actually need.
So no applying for random loans just to impress the credit bureaus.
Nope. Quality over quantity is key.
This is great advice. I'm learning so much.
It's all about understanding the factors and making informed decisions.
Well said. Okay, what other credit score secrets are you ready to spill?
All right, we're back and ready to keep digging into these credit scores.
Yeah, we've covered some good stuff, but there's definitely more to learn.
One thing I noticed in both the Bank of America and Experian guides is they talk a lot about credit limits.
Yeah, it's an interesting part of this whole credit thing that people don't always think about.
I'll admit I haven't really thought much about credit limits. I figured as long as I kept my balances low, I was good.
Well, it's not quite that simple.
Yeah.
Your credit limit actually matters to lenders. Like, it affects how they see you.
Really? So how does that work?
Think of it like this. A higher credit limit can actually be a good thing because it shows lenders that someone trusts you with a bigger amount.
So it's not just about keeping my balance low.
Hmm.
It's also about having a decent credit limit in the first place. Right. Even if you're not using all of it, a higher limit helps lower your credit utilization ratio, which we talked about, that affects your score.
That's interesting. So, like, requesting a credit limit increase could actually be a good move?
It could be, but you got to be strategic about it. First, make sure you're, managing your credit well, paying on time, keeping that utilization low.
Right. I wouldn't want to ask for a higher limit if I haven't been the best with my credit in the past.
Exactly. And second, just be aware that requesting an increase might trigger a hard inquiry on your report, which can temporarily lower your score a bit.
Ugh, those hard inquiries. Seems like they're everywhere.
Yeah, they can be a pain.
Yeah.
But in the long run, if you get approved for a higher limit and you're using your credit responsibly, the benefits outweigh that little dip from the inquiry.
Okay, that makes sense. So higher credit limit, good. High credit utilization, bad. Got it.
You got it. Okay, let's switch gears a bit and talk about something that can be a game changer for some people. Debt consolidation.
Debt consolidation, I've heard the term, but I'm not really sure what it is. Is it just like combining all your debts into one?
Basically, yeah. You take out a new loan to pay off a bunch of your other debts, usually the ones with high interest like credit cards.
So instead of like juggling all these different payments and interest rates, you just have one loan with hopefully a lower rate.
Exactly. And that's the big benefit. You can save a lot of money on interest over time.
That sounds pretty good. But how does consolidating debt affect your credit score? Does it help or hurt?
It can actually do both.
Yep.
It depends how you do it. So first off, just applying for a consolidation loan, that's going to trigger a hard inquiry like we talked about.
Oh, no, not another hard inquiry.
Yeah, those are hard to avoid. But here's the thing. The overall impact on your score really depends on the interest rate you get on the new loan compared to the rates you had before.
So if I can get a lower interest rate through consolidation, it could actually help my score.
Exactly. It shows lenders you're being proactive about managing your money. And that looks good.
So it's not just about simplifying payments, it's about lowering your interest burden and showing you're responsible.
You got it. But there's a potential downside too. If you close those old credit card accounts after you consolidate your debt, it can actually shorten your credit history.
Oh, right. We were talking about how important it is to keep those old accounts open.
Yep. And closing them could bump up your credit utilization ratio too, if the consolidation loan has a lower credit limit than all your cards combined.
Wow. It seems like every decision you make affects your credit score in some way. It's a lot to juggle.
It is. That's why you got to think about everything holistically. Weigh the pros and cons carefully.
You're right. It's not just about following a checklist. It's about understanding how all this stuff works and how your decisions affect things both now and in the future.
I couldn't have said it better myself. And speaking of taking a holistic approach, both Bank of America and Experian talk about something that's really important, budgeting.
Budgeting. Oh boy, that word makes me cringe. But I know it's important. I just haven't really figured out how to do it.
Yeah, I get it. Budgeting can seem scary, but it doesn't have to be. Think of it more like a tool to help you.
A tool? Like how?
A budget gives you a clear picture of where your money's going, so you can see where you can save and make smarter choices.
So it's not about depriving yourself, it's about being in control of your money.
Exactly. And when you're in control, you're less likely to overspend or miss payments or fall into debt, which obviously all affects your credit score.
That makes a lot of sense. Okay, so what are some good budgeting tips to get started?
Both sources say a few things are key. First, track your spending. Use an app, a spreadsheet, whatever works for you. Just keep track.
Yeah, you can't manage what you don't track.
Right.
Right. Then figure out your needs versus your wants. That helps you prioritize your spending.
That can be tough sometimes. But being honest about what you really need versus just want makes a big difference.
Absolutely. And finally, set some realistic financial goals, whether it's paying off debt, saving for a house, building an emergency fund. Having goals keeps you motivated.
I like that. Budgeting to achieve your dreams, not just to restrict yourself. That's the spirit. And remember, a good credit score is just one piece of the puzzle. By budgeting and building good habits, you're setting yourself up for success in the long run.
All right, so we're back for the last part of our credit score deep dive.
Yeah, we've talked about a lot, but there are a couple more things we should cover.
You know, something I kept seeing in both the Bank of America and Experian guides was how much they emphasized credit monitoring. Seems pretty important.
Oh yeah, it is. It's like think of it like a security system for your credit report.
Hmm.
It helps protect you from fraud and identity theft.
Yeah, okay. I like that analogy.
Yeah.
So how does credit monitoring actually work? Like, what does it look out for?
So basically, it's always watching your credit report for anything suspicious. Like if there's a new inquiry or someone tries to open an account in your name, or even if like your address changes and it wasn't you.
So it's like a watchdog that barks if someone tries to mess with your credit.
Exactly.
Yeah.
And that early warning is key.
Yeah,
The sooner you know about a problem, the quicker you can fix it.
that makes sense. Are all credit monitoring services the same? Or are there different kinds?
There are some differences. Some just focus on your credit report. Others have extra features like identity theft insurance or dark web monitoring that checks if your info is being sold illegally online.
Wow, that's pretty intense. And I've heard some banks and credit card companies offer credit monitoring for free as a perk.
Yeah, that's true. It's worth checking if your bank does that. It could save you money and you get some peace of mind.
Good tip. Okay, switching gears a bit. What about people who are new to credit or those trying to rebuild their credit after a rough patch?
All right.
What do our sources say about that?
Both Bank of America and Experian recommend secured credit cards as a good way to start or rebuild.
Yeah, secured cards, right? Those are the ones where you put down a deposit like as collateral.
Yep, exactly. That deposit makes it less risky for the lender. So it's easier to qualify for a secured card even if you don't have great credit.
So it's like a first step towards building a positive credit history.
Exactly. As long as you use the card responsibly, pay on time, keep your balance low, it shows lenders you can handle credit.
And then those good actions get reported to the credit bureaus and help boost your score.
Right? And as your score goes up, you might be able to get an unsecured card later with a higher limit.
That's encouraging. It shows that even if you've made some mistakes, you can still turn things around.
Absolutely. A bad credit history doesn't have to follow you forever. With time and effort and the right strategies, you can definitely rebuild and reach your goals.
Well said. We've covered so much in this deep dive. As we wrap things up, any final words of wisdom for our listeners?
We've talked about all these different strategies for improving your score. But beyond the numbers, I think the most important things are patience and persistence. Building good credit takes time.
It's a marathon, not a sprint.
Exactly. There will be bumps along the way. But if you stick with it, manage your credit responsibly, stay aware of your finances and put in the effort, you can achieve your goals and build a solid financial future.
Couldn't agree more. So to everyone listening, remember, knowledge is power. The more you understand about credit, the more control you have over your finances. Don't be afraid to ask questions. Do your research and stay on top of your credit health.
And remember, even small steps can make a big difference over time. Every on-time payment, every bit of debt you pay down, every effort you make to manage your money wisely, it all adds up to a stronger financial foundation.
Awesome advice. Thank you so much for joining us for this credit score deep dive. We hope you found it helpful and empowering. Remember, you have the power to shape your financial future. So take charge, stay informed, and keep striving for financial well-being. Until next time.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.